So the format of today's session is going to be, like we always have, a little bit of an introduction about Moolah for all of those who do not know Moolah. I think most of us are Moolah tribe members, but still I will talk about it because for the benefit of those one or two people who are not a part of the tribe. And after that, I will introduce Suresh to all of you, and then we will begin. I'll hand over the stage to Suresh to take it from there. So yes, very quickly, 1 more minute to go and then we begin. A warm welcome to all of you on this Saturday evening on our Moolah webinar on the bond market and investments in bonds as an investment instrument. Yes, Moolah for Women is a platform for financial freedom for women, by women, and there is no more reason for any of you to fear because of the Moolah Financial Literacy Platform, where we focus on women specifically, and we have a unique approach to make finance simple, fun, and jargon-free, so that the audience can get introduced to the world of finance and start taking charge of their finances from a position of knowledge. Moolah, who's it for? It's for everyone. It's for the kids. So we've started having workshops for kids from 8 to 12, 12 to 13 to 17, 18 to 25 for young adults, for working professionals, homemakers, young women, retired women, womanpreneurs, for everyone to become financially independent and start taking charge of their money decisions themselves. We have a tribe of over 1,000 plus women. Of course, Moolah has impacted more than 4,000 plus people from across the globe, but we have a tribe of more than 1,000 women at Moolah. What's the Moolah impact? It's helped change shift the mindset of people to make them feel more in charge, worthy, and deserving. It empowers women to become equal stakeholders in financial decision making. It supports them to make them a part of a community of like-minded women, and it transforms them to become smarter, more confident, liberated, and perhaps even happier. So as the young kids are concerned, we have workshops for kids from 8 years to young adults who are 25 years old. And this helps, the workshops help increase the understanding on money for these kids. And they begin and they start early so that they begin well. And Moolah provides them with the right environment so that they can ask their questions without fear, and empowers them to become confident in managing their money. We offer courses which are delivered over WhatsApp. There are 2 courses. There's a Finance Essentials course, which is the basic course, and which starts from the very basics of finance in a very simple step-by-step manner, and then there is a Finance Advanced course. These courses are specifically designed for women. They're 3-month courses delivered over WhatsApp, and they just take a 2 to 5 minute read every day. And as a part of this, we also have 9 weekly live sessions, which are group Q&A sessions. We also have 3 masterclasses. We have monthly quizzes. And what we've introduced now is also for the new groups, a one-on-one coaching, which you can avail of as a part of the Finance Essential course, which is a 1 hour time with me specifically to plan your finances. And by the end of this course, women do shed away their fears and start becoming confident to manage their money. I also offer at Moolah one-on-one coaching services, where you can deep dive into topics of your interest, get clarity about your personal finances, or understand your own portfolio better. We do workshops for target groups, which are it could be for kids, it could be for organization, it could be for women-centric community. And the whole idea is to tailor make these sessions towards what you want from the session. To quickly introduce myself, I am Meeta Gupta. I have done my MBA in finance and have over 30 years of experience in banks and corporates, and I'm passionate about empowering women financially. My co-founder Ritu, and she's also done her MBA and has 30 years of experience. She's currently an organic farmer and an angel investor, and she's equally passionate about financially empowering women across the globe. Today, we invite guest speakers every month at Moolah, and the idea to invite the best-in-class people for these webinars is so that you can learn from the experts, and the topics that we have covered till now include, ranging from finance to mindset building, business and entrepreneurship, book reviews and economic awareness, and women empowerment. So these are some of the guest people who we've invited. And Suresh, you will be a part of this soon. So yes, corporate events. We also do a lot of corporate events. We've conducted corporate events and webinars for corporates and women-centric forums. And like we said, these are suited to their individual organization and requirements. We collaborate. So as a part of Moolah, there's no point of just learning if you can't act upon what you've done and what you've learned. So we have collaborated with industry partners, and that's the reason we will be collaborating with Bond Bazaar too, which is Suresh's company, to see that all of you can convert your knowledge into action, and we have trusted resources available for you so that you can plan your finances better. These are some of the things. Of course, our tribe members have said that they've become more confident, they've started becoming more knowledgeable, they've got equipped, they feel that their understanding has improved, and many such things. So yes, if you would want to join Moolah or know anything about Moolah or about one-on-one coaching, you can email to me with using this email ID, which is moolah.fl@gmail.com. You can WhatsApp me directly, or you can WhatsApp the company number, which is with Ritu. So either of these numbers you can reach out to us on. And yes, we are registered in Gurgaon. We have our office in Gurgaon, and we are also available on social media. We have our podcasts. You can check out Moolah Talks podcast. You can follow us on Instagram using Moolah for Women hashtag, and we're available everywhere. So that's quickly about us, and thank you for listening in. And warm welcome to all of you who have just joined in. Would love to now introduce Suresh to the forum and then hand over the stage to him. So if you give me a second. Yes, so Suresh, with a little bit about Suresh. Suresh has over 2 decades of experience, and he started his career as a chartered accountant and has grown to work across the entire spectrum of investment banking, lending, treasury, debt restructuring, special situation assets, risk management, technology, and retail. He has a strong reputation in the infrastructure sector and brings to the table immense passion along with his experience that is infectious and often shared by his core team. He has spent a good number of years in a leadership position and has a penchant for developing talent and creating entrepreneurs during his stints at L&T and at Bond Bazaar. Suresh's quest to open up the retail markets for bonds led him to partner with Nipa Sheth of the Trust Group, which is one of the largest players in the market, to develop Bond Bazaar as a pioneer tech and knowledge platform for bonds. Suresh, like I have told some of you, is also my ex-colleague, and I have personally known him for over 20 years, and I extend a really, really warm welcome to you, Suresh, at Moolah, and we really look forward to your session today. So, yes, should I switch on? Yes, Suresh, the stage is with you.
Thanks, Mita. Thanks for giving me this opportunity. Frankly, wonderful evening to all of you. My pleasure to be, here today and discuss something about bond market. It is slightly big topic. Normally, even the basics of the bonds we cover in 3-hour sessions. So I'm squeezing this entire thing in 30 minutes, something odd amount. So we'll try to see that at least something is there on table for all of you about bonds. And then some action point which can help you to understand bond a little bit better. Frankly, when I discuss something about bonds, it is sometimes, the mix of audience is very, very important to understand that what is their level of understanding about finance and various instruments. I will not say that, but sometimes that deep understanding of instruments help you to appreciate some other instrument which you probably not have explored. So in this presentation, a little bit I will cover about personal finance, and then something about bond market. I will touch about that. And then stage is open for all of you. Please feel free to ask any question during this PPT also, because that is the only way to, exchange notes. Right, Mita?
Absolutely, yeah. Absolutely. So should I put on the presentation?
Please.
So just let me know if you can see the presentation. I think you can, right?
Yeah, I can see.
Yes, it's visible.
Perfect.
I think it is not in. Yeah, no, it's perfect.
It's right. Okay,
Yeah.
so I'm going to go to the next page. Yes, Suresh.
So as we discuss, we will just discuss something about the investment options and then where the bonds, fit in all your investment options, and various few aspects about the bond. Yeah, Nico. Mita, next.
Yes, yes,
So
yes.
good evening to everybody. Uh, Again, just one thing, please feel free to ask any questions if you think that I am going a little bit fast or certain things about the bonds you think that it is not covered properly. Please feel free to ask those questions. That's the only way we can have a better understanding about bonds. So when we talk about bonds, our first motto is whether you love your money. And when I say when you love your money, is basically the money which you have earned, by working very hard, you know. So if you love your money, then you be very careful about your money. Two things. One is you will not punt, you know, and lose that hard-earned money. You will think twice. You should think twice. You should ensure that your money is earning enough for you, your preserved capital. So if you love your money, then probably bond can be a really good option for you to understand that how it can help you to grow your money securely. And this entire journey about bond is about that. So that's the first thing with which we start. Yeah, Mita. So as I told you, you know, you can invest your money in various instruments. As we go to the next slide, Mita, you have plethora of options, but your options are depending on the age group in which you actually are. In a, let's say, up to 40, 45, you normally try to create wealth, try to grow your wealth. But after 40, 45, the most important thing for everybody's life is conserve wealth and transfer wealth, because that is the journey in which we work. And when we talk about creating of wealth, this age group, this entire thing probably was relevant 5 years back. The demographic change even in India is pretty strong. When I talk about demographic changes, it is all about that, uh, this transfer of wealth is also becomes your conserving wealth. 25 years back, even 15 years back, even in our age, for our parents, we were the financial assets. They know that apart from saving money, even if they invested in their kids and if their kids are, well placed, so they will take care of them during old time, during, old age. That has gone, that has changed, and that is changing pretty fast in India also. So, you know, conserving wealth at early stage is very, very important. Second thing is, the working life, because which is another big change which is happening in India, that around 40, 45, unless until you are actually growing significantly, uh, the retirement is shrinking. Sometimes it is forced, sometimes you have to plan, because the difference between your caliber or quality between 35 and 45 is also shrinking because of the technology and everything. So it is very, very important to conserve and grow your wealth at early stage and focus on that one. Otherwise, normally we end up in a you know financial crisis at particular age. And this is also about that, and the bond plays a very, very important role in this one. Next. So typically, this is what we talk about the options. So you have an option of investing equities. Equities can be direct investment in the equity market or through equity mutual funds, typically. Second is about your fixed income. When we talk about fixed income, then it is your fixed deposits, bank fixed deposit, corporate fixed deposits, saving schemes of the government of India, like postal saving schemes and all other things. I am talking more from the India perspective. because I thought, I'm not covering the international aspect of those bonds and all this thing, because it will make the presentation much wider. But bond aspect, probably, whatever we discuss about bonds, it is relevant for India also and overseas also. So these are the typical investment avenue. In the equity, there is an upside potential, but there is a huge risk to your money. In fixed deposits, when we talk about fixed income instrument, so three typical things are your bank fixed deposits, your corporate fixed deposits. Bank fixed deposits, you lend money to a bank. Corporate fixed deposits, then certain corporate like Shriram Transport, Muthoot, many corporate raise money through the fixed deposits also, and savings schemes. Real estate, commercial, residential real estate, these are the typical investment basket normally you have. What I probably have not written here is the gold and silver. Direct investment in the golds and ETFs. So equity is typically where you can invest and sell. There is upside potential, but you can get the liquidity because it is a transferable instrument. When it comes to fixed income, FD is not transferable. If you invested in the FD, you hold till maturity, you get interest rate during your hold period and principal amount on maturity. Debt mutual fund is one instrument where you can sell within 24 hours and they invest in the bond market. So we will cover out of this entire thing fixed income instrument, because bonds is part of this fixed income instrument where it's tracked, right? Mita, the next slide,
Should I
please.
go to the next slide? Yeah.
Yeah, this is typically the investment habits issue. But fixed deposits has its own constraints. One is money is locked for the tenor. Second is normally the interest rate on the fixed deposits is much lower, right? Because they incur much higher expenses to mobilize these deposits because of the branch networks and all other things, right? So normally FD returns are always lower than inflation in the country. If your inflation is 8%, typically we have seen the FD returns are closer to 1 or 1.5% lower than your inflation returns. If it is 7%, it can be closer to 5%. Today, if it is closer to 7.5%, 8%, then FD returns will be somewhere between 6.5 to 7.5%. Something like that. It is because high intermediation cost. Normally, the FD mobilization cost is closer to 3 to 4% in India. So there are a lot of disadvantages of this fixed income instrument in any part of the country, any part of the world, whether it is India or overseas. Yeah, Mita, please next. So now we'll just introduce what is bonds and what we are talking about the bonds. Mita, I sent you one video. If you can just
Yes.
start that video about what is bonds.
Yes. So any questions until now, any terminology or anything that we've talked about, which Suresh has talked about, which is something which you haven't understood? Happy for you to ask that question right now, while I'm just seeing where that, yes, here it is.
One of the most common fixed income instruments is a bank fixed deposit. You lend money to a bank for a fixed duration and earn a fixed interest rate. Bonds work in the same way, only instead of a bank, you lend it to the government or high-rated corporates. And just like fixed deposits, you earn a fixed return for a set period. However, unlike FDs, bonds are usually secured by an underlying asset. In fact, corporate bonds are rated for their safety by SEBI-registered rating agencies. However, government bonds have no default risk, hence they are not rated. One of the best things about bond investments is that they are held in a demat form
and are therefore tradable like equities.
So you can sell bonds at the click of a button, having earned interest for your hold period. Did you know debentures, NCDs and non-convertible debentures are simply different names for bonds? In today's day and age, while it is important to invest, it is equally imperative to think about the kind of return you are getting out of those investments. And one such investment is bonds. They come with a compounding effect with a high interest rate that will, at the end of the day, give you a simple and secure way to multiply your returns. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
So this was some brief video about bonds. What is bonds? If there are any questions, I will be really happy to take those questions right now.
Any
Are we clear?
questions? Does everybody on the, I think people who've been through the Moolah journey would probably appreciate it a little more than people who have just begun the journey. So we've talked about bonds being similar to fixed deposits, but they are tradable, right? So they can be traded in the market. They are in a demat form, I think, and they are rated. So there are corporate bonds and there are government bonds, right? Corporate bonds are rated, whereas government bonds are not rated because they're anyway secure. They're supposed to be safe and secure, and because of which they're not rated. Yes.
You can go to the next
So
slide. I will just
yes,
cover
till
few
then,
points. Then
sure,
till that
sure.
time, I let. So as we
Smith,
discuss,
yes.
bonds are locked like FDs, but it has a features of equities. This is the flexibility of equities. Go to the next slide because we just shown the presentation
One
for
of the
this slide.
most common fixed income
Go to the next slide.
instruments is a bank fixed. One of the most common fixed income
Sorry.
instruments.
So actually, as we discuss, like FDs, what we give, we lend money to a banks. In the same manner, we normally divide the corporate bonds, as Mita said, into two categories. One is government bonds and corporate bonds. This differentiation actually not big because the underlying instrument bond is same. Why we created this distinguish only because of one reason, that government bonds, since they are sovereign, because government can't default. If they borrowed money, if they have to repay money because of some reason, they can't borrow again and repay, or their tax collection is lower. What they will do? They will print money and repay your money, and that's why they are called sovereign. They are not rated because they can't default. How the government can default, right? Because they are the person who print the money. Corporates are rated. So there are high rated corporates like L&T, Tata, Birla, Reliance, and more this. And but even the banks borrow from the bond market, and that's the key. So if there is one more slide, probably after that you may have certain more clarity about bond market. Go to the next thing. Like FD, you get fixed interest rate. Let's say if you do a 3 years FD in a bank, for 3 years you get interest payment. At the end of third year, you will get principal repayment from the bank. In the same manner, in the bond market, if the government or corporate borrows, they pay you interest for each interval, which is pre-decided, let's say annual. And at the end of the 3 years, they will repay your principal. The money will come directly in your bank account. So bonds are listed on exchange. FDs are not listed, right? So that's why they can be sold in their exchange, which is BSE NSE. And since who invest in the bond market, I will just go to the next slide. Then probably you will understand a little bit more that why that you can earn 3 to 5% additional interest rate on the bonds. Mita, we discussed that it is a rating agency. There is a ISIN. Those things are there. Go to the next thing, please. So this is the typical size of bank deposits and bond market. The numbers are not visible, so I just say that bank deposit is 170 lakh crore. These numbers are in INR. I hope you understand the INR numbers. I'm not converting in the US dollar because otherwise we will just get confused.
That's absolutely fine. Yeah, yeah.
So out of 170 lakh crore, in current account, around 17 lakh to 20 crore money is lying. In the saving around 60 lakh crore money is lying. And in the FD, it is only 90 to 100 lakh crore money is lying. How much we earn in the current account? 0% interest, right? How much money we earn on the saving account? Typically, it is less than 3% because it is on your average balance. FD, of course, we earn 6.5 to 7.5%. So just imagine that 70 to 80 lakh crore money is lying in the bank account, and that money, banks is not paying much of interest. And that's why whenever you see the presentation by HDFC, ICICI, Axis Bank, they always talk about CASA ratio. CASA is current and saving account ratio of their overall deposit. Why they talk about this one? One simple reason. The market understand if your CASA is high, like HDFC Bank says that my CASA is 55%. It means on 55% of your borrowings, you are paying almost negligible interest rate. So even if you lend the money at 6%, 7%, 8%, your business is highly profitable. So if I have to simply say that 80 lakh crore money of public is lying with the banks, which is not earning much. 80 lakh crore, even if you deploy at 10%, it is 8 lakh crore. 8 lakh crore, you can earn additional income if you do proper investments. And this money is of retail. So since retail is losing this money, who is earning it is banks. It's money which is a bank. And that's why we say, do you love your money? If you love your money, you will not be so lazy to keep your money in saving and current account. I'm not even going to the FDs. Now, do the size of the bond market is so small that you can't invest in the bond market, and that's why we put the size of the bond market. So size of the bond market is closer to 180 lakh crore, and it is growing at the rate of 25%. So in bond market, government bond market is closer to 140 lakh crore, and corporate bond market is closer to 40 lakh crore. It is growing at the rate of 25% by the way. In the developed economy, the bond market is 4x of equity market. India, it is hardly closer to less than 1x. India's GDP is 250 lakh crore. Typically, you might have heard the $3 trillion, right? So if it is around 80, 82 rupees exchange ratios, it is closer to $3 trillion. Your, your market cap of BSE is closer to 250 lakh crore. Bond market is not far away from all these sums. These are the typical facts. So bond market is so big. So who is investing in the bond market? Two guys. You put money in the banks, bank buy bonds. You put money in debt mutual fund buy bonds. Insurance companies buy bonds, PF buy bonds, right? These are the typical investors in the bond market. Now, debt mutual fund, you lose 3 to 4% because of intermediary. They charge 1.5% as their annual charges and all other things. Banks typically have a branch network and all other things. So they, whatever the money you have to lose on the FD, you lose, right? So if you can directly invest in this bond market, you save 3 to 5% based on the type of things are there. And frankly, if you convert your current account and saving account money into bond market, it is much higher, much higher. And this is the opportunity which we are talking about by providing this platform. This is the bond market. This is typically we talk about the bond market. So it is nothing. In simple terms, bond is nothing. It is a borrowing. It is borrowing by banks, and it is borrowing by corporates. By the way, just few facts, because frankly, because Zoom has its own limitation about interactions, but bank deposit growth is closer to 11% in India, right? Means bank deposit of 170 lakh crore is growing at the rate of 11%. Credit growth means banks, of course, borrow to lend, right? Lending growth is closer to 16 to 17%. So there is a gap of 4 to 5%, 6%. This 4 to 5% banks borrow from the bond market. They have to bridge that gap, right? If your lending book is growing at the rate of 16%, and so they have to borrow the balance money, they borrow from the bond market. And in bond market, they pay much higher interest rate as compared to the FDs, and the borrower is same in the banks. So, if we understand this market a little bit better, you can actually earn much higher interest rate. Go
Yes,
to the next
Priyanka,
slide.
you have a question. Priyanka has a question, Suresh. We'll just
Yeah,
ask.
please.
Hi, Suresh.
Yeah,
so
hi.
just I have a question over here. This may seem very basic, but just trying to understand the structure. Bonds, we understand, is basically in layman's term money that the banks and the government is borrowing, right? So banks borrowing,
corporate and governments. Corporates
right,
also like L&T, Tata, Birla, name a
right.
corporate, they may be borrowing from the bond market.
Banks and corporates
Corporates,
borrowing
yeah.
is understandable. Why would government need to borrow? Like you said, they're printing the money. They're the ones who are taking all of the deposits.
Why banks borrow from the bond market? Because banks, you talking about why government borrow from the bond
Government
market?
needs, yeah.
Okay, so you heard about fiscal deficit?
Yeah.
So let's say government collect their revenues from income tax, sales tax, many other taxes, right? Local taxes and other things. So let's say they get this 100 rupees, but their expenses may be closer to 104 rupees, where the government spend money, salaries of the government employees, army, on the social infrastructure which the government create for the public and everything. Many road projects, highway projects, there are many social schemes and all things. They may spend around 104 rupees. Normally, all the governments in the world run fiscal deficit because the government job is to provide facilities for the people. So their inflow income is closer to 100 rupees. Their expenses are closer to 106 rupees. The balance 6 rupees they borrow from the bond market. All the government, like US government also, in Dubai also, in all the government borrow money from the bond market because their income level is always lower than the expense. The government, why any government has to be profitable? They should be incurring actually losses. And that's how the government works. So they have to borrow this money and they borrow more from the bond market.
Thanks a lot.
Yes, Smita, you have a question.
Am I audible now?
Yes, you are.
Oh,
Yeah.
thank God. Okay. So Suresh, I had this question. Even your PPT, it mentioned that investment in securities are subject to market risk. So in this case, what are the market risks?
So first thing is we are SEBI registered entity, and since I am a director, so please understand that I can't advise anybody to invest in a particular security, and that's why this disclaimer whenever I am there and Bond Bazaar name is there, I have to put. First thing, when you talk about the risk, what risk you have when you invest in the FDs of the banks?
If the bank goes insolvent, I mean, if the
Same
bank,
risk.
yeah,
Same
same
risk.
risk. Okay.
So if you give money, SBI's fixed deposits in the form of fixed deposits or in the
Yeah.
form of bonds, does it matter to you?
What
If
do
they
you mean
default on
by,
the,
yeah,
if say SBI, State Bank of India, borrows in the FD market and borrows in the bond market also, right?
correct.
Borrower
Correct.
is same. So if he
Yes.
defaults on bonds, he will default on the FDs also.
Yes.
Same. It is same.
So it's
So give
equally
you one
risky.
example that up to 5 lakhs FDs are guaranteed by Reserve Bank of India,
Yes.
but bonds are secured. Bonds are
Hmm.
secured by underlying assets. Normally, the collateral is given by the banks and any corporates. So they are secured. The security can be in the range of, like when you borrow personal level home loan or anything, you give a security, right? In the same
Yeah.
manner, when any corporate or even banks borrow, they give a security. The security can be 1.2x to 1.5x based on the client to client,
Okay.
And also
right?
the rate of, so what Suresh said, Smita, if you are lending to a bank in form of an FD, the bank will give you 6.5 to 7%. But the same
Correct.
bank, when you're giving it, borrowing, when the bank borrows in the form of a bond, the rates will be higher. Okay, so for the same lender or for the same borrower, you will be getting a higher rate if you invest in a bond of an SBI versus a fixed deposit of an
Right.
FD.
I
Absolutely.
just bypass the bank in that process. I
Yes.
directly approach the issuer.
Yes.
I get it.
I mean,
Yeah.
the issuer is the same. It's just that
Yeah.
the banks, their internal system is not the kind of money that they need for intermediation is not required.
Right. Get it. Thank you.
So why in that case, I mean, if we are saying that bonds are actually secured by very healthy collateral, why is there this myth that an FD is more secure?
Because
That's a bit like you
in the
said.
entire journey, see, Smita, right? Sorry,
No, that's
Yeah.
Priyanka, in this entire journey, you are not even aware that bond market exists, right? That is the first thing. If you are not even aware, then it is, see, FD is not secure, we all. But how many people recognize that FD is not secure? When Yes Bank collapsed or certain cooperative, there are 10,000 cooperative banks Around 400 cooperative banks go belly up every year. And then the people struggle to get their money, and then they realize, oh, in my cooperative banks, RBI FD is not guaranteed by RBI, because RBI is guaranteeing FD only in the commercial banks like private sector, this HDFC, ICICI, and those type of banks. So our awareness is very, very low. And since awareness is very, very low in India, government try to see that whenever something goes wrong, they try to protect the retail investor. But the reality is your FD is not secure. It is unsecured thing. In the commercial banks, up to 5 lakh, it is guaranteed. In cooperative bank, it is not guaranteed at all. So going back to the next slide, when we say bring balance to your life, like bonds, like fixed deposits, gives you interest and maturity. Principal, you get the principal on maturity, but you earn 2 to 5% higher interest rate. So that is, and it has the features of equity. When I say features of equity, is typically like, you can sell bonds whenever you need money, which you can't do in the FD. If you put the FD for 3 years, and if you, because of some reason, you require money after 3 years, you will not get your money back. You have to wait for that period. Otherwise, your interest rate will come down if the premature withdrawal is there. But bond, you can sell at any given point of time. And till the period, if let's say you are holding the bond for 6 months, and so you will get the interest for 6 months. If you are holding the bond for 7 months, you will get interest for 7 months. And with that principal, you will get your money within 24 hours. So that is first thing. Second thing is, since it comes in the demat format, it is tradable. That's the key. It has some limited upside. In this presentation, I'm not going to discuss that right now, because right now, frankly, it is just good to understand the basics about the bonds. But any of you think that, equity market has delivered better returns, or what type of returns you think the equity market has delivered? Any of you invest in the equity market? I'm sure you may be, right? Because we are talking about bonds, and I always talk about only current account and savings account, because that market per se is big, and most of the people, our money is lying in that account. But since equity may be much more familiar to you guys, any views that how much returns you make on the equity market?
I've recently started investing, so it's too early to comment on that,
Should I show you a few charts? Because I just shared with Mita a few charts about the equity market.
That's really
Mita,
good.
just
Yes.
We've all recently started investing after Moolah came into our life. So right now we're not making any money.
okay. This is
the right time.
this is the UK chart for last 25 years. 25 years back, UK was closer to 7,000 index. Today it's closer to 8,000. So in last 25 years, you made hardly 10% or 11% return in the UK stock exchange. If you would have invested in 96, 2000 at 7,000 equity, your money would have grown. Let's say 100 rupees would have become 110 rupees. That's it. Next chart, Mita.
Yeah, just going.
This is Meta platforms. We all are using Facebook, right? In last 2-3 years, the Facebook stock has crashed from 400 to 175 odd amount. Next. This is Dow Jones index. In last 3-4 years, actually, depends that where you invested. The Dow Jones might have grown only to 10%. And your equity, in fact, even if you invest in 10-year US Treasury or 2 years or 3 years, it is 4 to 5%, closer to that one. So
how about Nifty and Sensex? Nifty and Sensex have done really well.
So we'll see
We'll
it.
come back to this one.
It's coming.
Please, next. This is DAX. It is German equity index, not delivered any return for last whatever the period you are talking about, 3 years or so, 5 years or so. Next. It is Hang Seng. It was almost 5 years back, it was 33,000. Today it is 20,000, means your money has crashed by almost 1/3. Next. It is Citigroup. Last 25 years, the stock has crashed from 500 to 50 rupees. Citibank is, of course, one of the largest bank, correct, of US. Next. It is a Boeing. the aircraft in which we all go, last 4-5 years, the stock has crashed almost 50%. Next, Amazon, the stock has crashed. Although I'm sure you may be thinking the Amazon may be doing great, but last 5 years, the stock has not delivered any returns. It is German motor vehicle, Volkswagen. Nothing. In last 8-9 years, the stock was 250. Today it is 160. Next, JP Morgan, no returns in last 5 years. HSBC Holdings, again, one of the largest UK bank, no returns in last 25 years by them. Since 2000, where it peaked 900 rupees, in last 25 years, your money has depreciated by 33%. Correct? Next, G, one of the best, everything in the world is done by G. But last 25 years, G stock has crashed from 350 to 85. 25 years. I'm not talking about 1, 2, 3 years. Intel, we all know it is a great company, but last 25 years, आपके अभी in your even laptop, the chip is of Intel, correct? One of the largest, but last 25 years, zero returns. Zero nahi. In fact, your returns have crashed. It is
Negative.
next. European index negative. Next. These are all facts. Wells Fargo. Next. In fact, the time is short, then I will just move the chart. So you were talking about Nifty, right?
Yes.
Somebody said that what about Nifty? This is a Nifty chart for last 15 years. So if you would have invested 1 lakh rupees in Nifty in, let's say 2006-7 or 2006-7, your money would have grown to 3x. So equity guys will tell you the story, oh wow, your money has gone 3x. Why not to invest in the equity market? So you have a calculator. It will take not more than 1 minute. Just multiply your returns every year by 10% because in India, the bonds or FDs are yielding closer to 10% yield. Your money would have grown to 4x in the same period by investing in the fixed deposits. So don't go, see, sometimes equities sell the dreams. So these are facts, by the way. Just go back and check your facts. So now the 3x return is the average return. So, hello, am I audible?
Yes.
The 3x returns are the average return. So out of that, somebody may be like Rakesh Chunchunwala or Ashish Kacholia who would have made 50 to 100x return. So average return of the retail investor is not even 2x. Please do your calculation. It is not even you might not have made 100% of that because this is the average return of Nifty. You will be surprised if I share the chart with you. 100 Nifty, top 500 stocks, average stock returns in India. Pathetic. I shared you the chart of the world. I am now sharing the chart of the Nifty. But anyway, again, I'm just saying when I talk about bonds, the comparison is not with the equities. The comparison is with your money lying in the saving account, current account, our laziness. It is just if you utilize properly, it's a great money which is available on table. And that's why I say whether you love your money. If you love your money, you do your analysis of your portfolio every day and just realize that you can get your money anytime when you want if you invest in the bonds with interest earned during your whole period, which is not possible in the stock market, which is not possible in the FDs. So this was small thing from my side. Happy to answer any questions which you have about the bonds.
So
Or
maybe
anything about
Suresh,
equities also.
before that, Suresh, if you could also tell our audience about how should they go about investing now that they think that, okay, they need to invest in a bond. How should they go about investing in a bond?
Simple. Just open your account, start with 1,000 rupees of investment, 10,000 rupees of investment, which is, it is like, it is nothing, right? Because, and start your journey. Once you will understand, trust me, it will not take more than 24 hours to understand the bond market. You have to just take the first step to open the account, do your first investment.
Account
Somebody,
as in the demat account, right? As in the demat account, or are you talking
yes.
So how is Bond Bazaar doing something which is already not there in the market? Can you just give a little bit of a perspective on what Bond Bazaar does and how does Bond Bazaar come in this whole picture of the bond market, which is currently there?
See, okay, let give you some perspective about the first thing is the platform where buying and selling of bond is just like equities. We made it possible. Earlier, it was more like a manual process. It's a yield-based trading. So that's why I say the journey is very important. But you have to open an account with us because we are SEBI regulated entity. We are governed by BSE NSE, and we have also you have to open a demat account with us because your securities go directly in the demat account, which we open with the CDSL. Once you buy the bonds, the money goes, the securities come directly on your demat account, just like equities. And whenever the interest payment or principal payment is due, it will come directly in your bank account. Issuer will make payment directly in your bank account. But once you start investing in the bond market, and once you start comparing the returns, if you do your first journey, this is what I always say, then you never leave the bond market, because then it is possible for you to compare the ease with which you can do the investment and the risk which is lower as compared to the other market, and the returns which is higher as compared to the relevant market, which is FDs and other things. But the first step is more important. So from our side, what we offer to you, anybody has any queries, I will share the connect with my customer acquisition team also, who can help you to just go through this journey. Account opening, everything is any which way a simple process, but the first step is more important.
So Suresh,
And-
my question is that suppose we don't go through Bond Bazaar, if we have a demat account, we can straight away go to the bond. I mean, we can see all the bonds which are listed on the stock exchange, and we can anyway trade in them, right? Is that true?
So not true, because the way we are connecting various stock exchange, you will not see the bonds in the same manner. There are many websites who are selling bonds. When you come to Bond Bazaar, you can buy and sell bonds both, which is possible only in Bond Bazaar right now.
So,
that is what
that means, so explain this to me a little better. So we are, suppose I already have a demat account with ICICI or with any of these security, with HDFC or with Zerodha or anything. And I scroll down and I say, oh, I want to buy an HDFC bond, or I want to buy a government bond, whichever it is, NSE, whichever the bond is, NHI bond or REC bond or anything. Now, can I find that bond in the thing, and what is the minimum size that I can trade buy? What is the minimum ticket size of each bond?
So Mita, we are connected to BSE and NSE cash
Right.
segment.
Right.
So once you connect to the BSE NSE cash segment, because you know the settlement, the buying and selling through the exchange platform, it is compulsory from SEBI that the customer should open a demat account through the broker with the CDS or an HDFC.
Right.
Even-
Which we
so
already
the-
have, suppose.
No, you already have, but when you are so I am also a broker, HDFC is also a broker, ICICI Bank is
Right.
also.
Right. So you're also
if
just
you are going-
right.
So you have to open that account through me also, the demat account, because I can't touch your securities and money. It comes directly on that account. And
Right.
that's why it is a regulatory requirement that you have to open that account. Without that, I can't allow you to trade.
So what is the ease that one would have to go through your portal vis-a-vis some other, like a Zerodha or ICICI or HDFC or any of the others, or Kotak or any of them?
So that's what one thing I say, that opening account is at zero cost. Correct? If you don't like the account, close the account next day. I will facilitate that. Because unless until you open the account, you will not realize that they are not even focusing on the bond market. What
They
we
are
have
not.
provided a platform where you can see all the bonds, and
Yes.
it is a yield-based buying and trade. Sorry, I don't want to use many jargons and all other things, because I will confuse all the audience, because it's a 3 hours presentation. I told you when I talk about certain things.
Yes.
So that's why I just say that if you go through this journey, half of the thing you will automatically realize.
So can I
Just
just
like that.
explain, because I've seen the Bond Bazaar website and I know exactly what it is and the difference. I've seen the ICICI and the HDFC and the other websites, and I've seen the website of Bond Bazaar. The difference is that Bond Bazaar only focuses on bonds. So if you're looking at a bond investment, you won't get confused, because you'll be able to see in one place what are the bonds, what are the ratings, what are the buying, how much can you buy it at, what are the rates of interest which are being offered, what is the maturity. So you don't have to search and hunt for it. And that's the beauty which I saw in Bond Bazaar. And so specifically, if you're looking at buying and selling bonds, then probably bond, and because of the fact that they also don't have any right now brokerage that they're taking, probably going through Bond Bazaar might make sense if you want to invest in bonds, is all that, I mean, which I understood. I found it really interesting, the Bond Bazaar, the website, because I mean, if I want to invest in bonds, I think Bond Bazaar is a place, because I can see in one place कौन कितना ऑफर कर रहा है और which is better, और पूरे उसके डिटेल्स दे देते हैं हर बॉन्ड का. They're giving nicely details of when is it maturing, what is the security behind it, and many other things, what's the rating, and many other things. Right, Suresh? Is that what I'm saying is right?
Absolutely. See, another thing is why we are not charging brokerage to the retail customers, and why it is useful, and why the zero and other thing. See, we are active in the primary market. We give, let's say, 100, 200, 500 crore to the people who raise money in the primary market. So I get my money from those. So then when I'm selling to the retail investor, there is no need for me. So let's say if I give 500 crore of bond, out of that, today 5 crore, 10 crore to the retail customer. Balance I distribute to the institutional market like mutual funds and those guys. Since my origination channel and every cost structure is same, it doesn't make me, to charge you anything or sell the bonds at a different rate. I give you at the same rate. That is the biggest advantage which you will not get from Zerodha, ICICI or anybody. Now there are few questions which I have read. Should I answer those questions?
Yeah,
Right?
so maybe you can answer Priyanka's question and then we'll go on to whatever is written on the chat. So Priyanka, you can ask your question, please.
I have a lot of questions.
Okay.
So
maybe some of the questions are already answered there. So please continue.
okay, so first I wanted to ask you, Suresh, was what is the return periodicity in a bond? Like, in an FD, you can choose to get
In
your
bonds
return
also you can choose monthly, quarterly, half yearly,
or compounding.
yearly, or on maturity. It is up to you. All
Which
types
is-
of bonds are available.
Okay. In the investment process, the inflow process, is it piecemeal like FD ki one time kar diya? Yeah,
You
like
can do
shares
piecemeal,
like
you can do every day, you can
Okay.
do whatever the amount. You can start from 100 to 1,000 rupees, and you can do every day, every month, whenever you want. And whenever you want to exit, you can exit also.
So it's the same, like in an FD, if I want to add, then I make a new FD. It's not like an add
Same.
to the fund.
Same,
But
same.
okay, that's
No, it's not same, na. How can it be same? She's saying that suppose we have to add, we have to make another FD. In this
The
case,
same
we
thing
have
is
to
in the bond market. Like you
Okay.
buy equities, right? You buy Reliance Industries 500 shares today. Tomorrow you want to add 10 more shares of Reliance Industries, and what is going to happen? 10 more securities will come into your demat account. In the same manner, if you bought 500 bonds yesterday and today 10 more bonds you want to buy, you can add and
No,
it
she
will be
said
added.
FDs. I mean, FDs का अलग होता है ना, FDs, fixed deposit का अलग होता है ना.
The same
FD
manner.
mein, yes, you have to, so every time you create an FD, a new FD is formed, right? Here,
Right.
again, it gets added. So if you're buying the
Like
same
equity shares.
security, if you're buying like equity shares, if you bought 30 equity shares on one day and the next day you want to buy the same equity shares, it will get added, it will become 40. But if you bought
Right.
some other equity share of another company, then it will add as a separate line item.
Correct. So
Correct.
it's more comparable to share thing than the
Yes,
FD
yes,
thing.
yes,
In that
yes,
aspect, I'm saying.
yes,
Yeah.
you're right.
You can say something like that, but it is both something. So it is okay.
So long as you've understood.
No, I'm a bit confused, but it's okay.
Okay, no,
No,
so
I think we'll
first of
leave it.
all, it's good to be confused, because confusion is the first step to start understanding how to clear your confusion. So absolutely a good place to start with.
Is the income from the government bonds taxable?
So interest is always chargeable on corporate bonds or government bonds unless they are specifically exempted. Like if you would invest in certain bonds, they might say that this has got some exemptions. So if there are certain bonds where exemptions are there, tax exemptions, then you'll know about it separately. But otherwise, as a general rule, all bonds are taxed.
Is there any special requirements for return filings or declarations for bonds?
No. Similar to equity.
Okay. Is when we hear about something like a gold bond in the market, this is what we're talking about, right? We're talking about,
No,
or
so a gold bond is a separate thing.
Yeah.
A gold bond is not a corporate bond or it is a bond, in the sense that it's like bond is when you're lending money to somebody, right? So it's like a fixed income. So you're lending money. Here you're lending money to buy gold. So a gold bond is when you're investing your money in gold rather than in a corporate. Okay. So then the movement of the gold prices will determine.
What is the average fee on an average of an advisor for bonds? Something like
What is the average fees?
fee. Is
There
it a
is no-
percentage? Is it
There is no real fees here, right? So unlike, because if the brokerage is not charging any fees, then it's like buying an equity. You buy equity in the market. Similarly, you just buy the bond in the market, and then you get those rates of interest, whatever interest you earn on it, right? And then when you sell it, there'll be some transaction costs when you're buying it, and some transaction costs when you're selling it, which are very, very minimal.
Okay. And last question, can Indians invest in the international bond markets?
I am not sure, but I think you can. But that's something Suresh will have to answer. So hopefully he's going to join in and we're going to be able to get that answer. So I think you can definitely invest in the equity market, but I am not so sure about the bond market. Yeah. So yes, what are the questions about the others? Smita, Priyanka,
Yeah.
have I answered most of your questions? And other than
Yes.
the ones I didn't know?
I'm all done. Thank you.
Superb. Yes, Smita, you had some questions.
I had a question. If you know, you can answer it. Whether they have an app. As you said, there is a website. So I think before I pose a lot of questions, I would rather go to the website and, get a hang of it. But then, like, whether you can do it at the click of this thing, no? Like Zerodha and all those
Yes,
apps.
yes, absolutely. You can absolutely do it at the click of a button. And Suresh is here, so he's going to now answer some of your questions. And I'll probably, Priyanka, you can also ask those questions
Yeah.
again.
So my question is, how do I begin? How do we begin? At least watching,
100%.
knowing about it, like to
Absolutely.
get familiarized with it. What should be our starting point?
So Suresh, glad that you could join in. We have a lot of questions which I wasn't able to answer.
So these bonds cannot be buy under Zerodha and all, right?
They can be bought under Zerodha and everything. They can, but it's just that it's not a platform which supports, so you'll be very confused in that platform. Suresh,
Oh yeah,
we
as
can't
mentioned,
hear you.
there is no much detail of the bonds when we
Yeah.
choose.
So Suresh, we have a
I'm-
lot of questions which have come in. Priyanka has questions and even Smita has questions, and there are quite a few questions even on the chat. So can we extend it by 15 more minutes to answer all the questions, if that's fine with you?
I'm okay.
Perfect. So Smita, would you want to ask your question first before we get back to Priyanka and the other questions?
Sure. I just wanted to know, like, how do we begin? Like, for example, I have interest in bond market, and I'm a chartered accountant myself.
Yes.
But
great.
somehow, like, it so happens that I have never, thought about bond market, because often we think that we finance professionals ourselves are, not really savvy, or not really aware of lot of products. So this was one of it. So now suppose I'm an investor myself, or if I have to, consult anybody, and how do I familiarize with your products or your platform? And do you have an app? And can we do it at the click of a button?
It is on a click of a button. First thing is, in the phase, so I just suggest that, you just log in, complete your KYC, do it for 10,000 rupees or 1,000 rupees of investment. You will learn automatically. Because
Okay.
I tell you something about basics about the bonds and how the bond market is useful. It is at least 3-hour session, right? So today we don't have that much time. And I just touched the topic about bonds. I'm sure once you start your journey about bonds, see whether you start from the bond bazaar or somewhere else is a different thing. I'm sure once you start with once you do it from other people, it is much more easy for you to compare the platform that what type of services we are offering, right? It is that simple as it is. How we are better and all other thing, frankly, today it is a secondary thing. The primary thing is for you, for all of you, is whether bond is a better instrument for investment, because the concept which I am leaving on table, it's a balance. of FD and equity, correct? It is important for you to understand from two aspects. One is the return aspect, it is a balance. Because in FD, you get a returns up to 6.5%, 7% or something like that. Equities, your expected returns are more than 12% or 13% or something like that, right? You think that you will get. How much you will get? Only time will tell. Past history is something different. There is no instrument between 8 to 12%. So first thing, it is that instrument which is offering you 8 to 12%. Second thing, it has a flexibility of equities, like you can sell it on a click of a button. Explore that. See, we do an active market making. Bond market is illiquid. There are 5, 6 reasons why you will trade through bond market. But the first step is that you start bond investment in bonds with a small amount, 1,000 rupees. How does it matter? Right? You will gain interest about one product, and that is not much, right? 1,000, 10,000 rupees is not much. If you like it, you continue. If you don't like it, stop it. But trust me, once you will start investment in bond market, you will not stop it.
So Smita, to answer your question, also go to bondbazaar.com and go and do the KYC there. Okay, they'll ask you to sign up, do a KYC there, and once you sign up, you'll be able to see the platform, you'll be able to see that, and you'll be able to start trading. If you have any questions, reach back to me. I'm always there. Otherwise, I can connect you to Suresh's team, and so begin from there, right? Priyanka had some questions which I didn't know, Suresh, so maybe you can throw some light. One was on taxation, right? So maybe you can, are all bonds taxable, including government bonds?
Your interest income is taxable on FD?
Yes.
Yes.
It is also a game of interest income. It is also taxable like FDs.
Right. Second is, can we invest in foreign bonds? Like we under the LRS, we can actually invest in equities. Can we? Is it allowed investing in bonds?
It is allowed.
It is allowed.
Okay. I don't offer that facility as of now. 1 year, 2 years down the line, yes, I can. But today I am not offering that facility. But as an individual, you can invest in the foreign bonds also, a limited amount.
Right. So fair enough. So that any other question which I didn't answer for you, Priyanka? Okay, so what is the rate of interest that is offered on bonds is another question. And can we open more than one demat account? Yes, you can open as many demat accounts. Okay, with any banks, any companies, you can open as many demat accounts. There's no restriction on that.
There is no restrictions.
And what is the kind of interest, which is what Suresh has said, depending on the credit rating, you'll be offered interest from 8 to 12% on various kinds of bonds. Okay, but we can buy bonds from ICICI Direct or Zerodha. Yes, you can. Should we buy one time or recurring is better? Depending on your investment, how much money you have, you can put in money, right? You want to put it in 1 go, in 2 goes, in 10 goes, whatever. So
Neha, it is just to add something, Mita. It is a game of interest, right? So whatever savings you have, you should invest, because interest lost for a day, it is lost. Like the day which we lost in our life, it is gone. The same manner, if your money is lying idle, and if you have not put it to earn interest, it means it is gone. The first thing is, don't keep any money idle. Invest. If it is not bonds, FD, whatever it is, but if you invest, not in equity. Equity is more about fund. You have to time it. Like FDs, there is no need to time it. Whenever you have your savings, just put it into to earn money on that.
Right. Like they say that, don't let your money idle, right? Let your money work for you. So if you have money, invest it. If you want to get out of it, you can always come out of it any point of time. But yes, keep your money invested, and bonds is a good opportunity to do that. And Archana is from Bond Bazaar. She shared her number.
Is there any reading material on your webpage that we can?
There are. Please, if you go through the web page, you will get a lot of reading materials about bond and various blogs you will be able to read. We share certain videos with the people, what is bond, what type of bonds and other things are there. So certain things we shared with Mita, we'll share with all the guys.
Which bond should we start with? So, do you have any advice, not as this thing, but on a friendly advice, that if one is just beginning their journey, what should one invest in? What should one really do?
So there are a couple of state guaranteed bonds right now available on the platform. Uttar Pradesh state guaranteed bonds and Andhra Pradesh state guaranteed bonds. So they are available in the range of 9 to 10% interest rate. So those can be start with. Certain Tata Capital preference shares are available, which is 1 lakh, which is 1.5 year maturity. That you can start, maybe available closer to 9.5, 10%. And if you want to play very, very safe, but I suggest play some 1,000, 2,000 rupees in the market and just try to invest. So 8.5% HDFC, Kotak, all those bonds are also available. It will give you a flavor that those type of investments you can do.
Right. And the taxation on bonds is the same as equities now, right? Earlier it was different, but now it's the same as equities.
Not as equity, as FDs. As FD.
As FD. So no. So what is short term considered here? Short term is what? Less than 12 months?
I tell you, don't go in that right now, because the interest income which you earn on the bonds is taxable as your FD income.
Okay.
If you get interest on your fixed deposits, it is taxable in the hands of in the same year, right? In the same manner, interest income which you earn on the bonds, it is taxable in the same manner.
But if it is to maturity, but if you hold it to maturity, even then
there are in certain cases it is like, but I think it is better not to get into this one. Just assume that it is taxable as same as FD.
Sure. And there is no separate filing that has to be done, right? Which is what another question of Priyanka was, that there's
nothing.
It's the same. Yeah. So
absolutely same.
Yeah. So I think that did you all like today's webinar? Did it make some sense to you? So maybe you can tell Suresh, how was today's webinar from your perspective, all of you? So Neha says it was a nice session. Thank you so much.
Thank you, Neha.
The fact that you kind of left everything and you are here really means a lot to me and to Suresh. And really, Suresh, really kind words from my side to you, because I think this is something which is quite a black box for a lot of people, and you've made it really simple, and also something which you kind of charged people to think about this option. So thank you so much for that, and thank you for your time.
Thank you. Thanks a lot. Wish you all the best in your this investment journey.
Thank you all of you, and thank you for being here, and see you for the next Moolah webinar next month, which is going to be on cybercrime security.